Side, starring the CryptoKeeper and BlockchainCrusader. Welcome to Debate Crypto. Question everything, trust nothing. It's your boy, Keeper. We are here tonight with the one and only Bill Noble. It's supposed to be around the charts, but I think we're going to be kind of, well, this way. I think we're going to be kind of lopsided, and we're just going to hit the charts from one direction tonight. We've got Bill coming in to save the day. Bill, thank you for being here.
Hey, thanks for having me, man.
Super excited to go over tonight. We were talking backstage a little bit, and I was telling you that, this might be the first time that we have had the opportunity to dive into the charts when the market actually feels and looks kind of bullish right now. So I'm excited to hear what your thought process is. I've been hearing everything from we're going to the moon to, Bitcoin's going to zero. So I'm really interested to see where we're headed or what your thoughts are on that. Before we dive into that, Crypto fam, make sure you are in the Discord. Smash the likes here at the show. You know how that goes. YouTube, tell YouTube, hey, we love what Debate Crypto is doing. So make sure that you are smashing the likes. Share this out to people. If you guys are on Twitter, tweet it out, let people know what's going on, and then jump into the Discord. We've got a lot going on over there with Danger Close Alpha. Our bug out drop starts here in a couple weeks. That's the 26th of August. That is going to be a 3-day prepper boot camp. So make sure you don't miss that. And for 0.1 ETH, 3 days with myself, with Crusader, we're going to try to get Bill to come on out with us. We're going to try to get as many people out there as we can. We're going to have a good time. Make sure you guys are there and looking for that. So without further ado, let's take a peek into the markets and see what's going on. We have got, let me update this. The cryptocurrency global market cap is at 1.14 trillion with the T dollars, up 0.19%. So things have slowed down a little bit. We've got Bitcoin sitting pretty much dead even at 23,911. It was up over 24 earlier today. So I guess we'll talk about that here in a few. ETH still up a little bit at 1873. Again, that was up over 1900. So we have seen some movement back to the downside. But again, the 7-day on Bitcoin almost 6% up. The 7-day on ETH almost 17% up. We love that, and I think part of that is the merge coming up, the actual announcement. I think it's like the 14th or something of September that's going to be happening. So super excited about that. We've got BNB at 322, up about 4% on the week. XRP doing what XRP has been doing recently, a whole lot of nothing, but we are waiting to hear some news on the case. That would be nice. And then Cardano, Solana, and Polkadot rounding out the top 10. Polkadot's made a nice little move up until today, up almost 14% as well. So let's take a peek. Bill, let me ask you this. When I look at the charts right now, when I see what's happened, the only correlation that I can draw that I personally, because I don't do nearly the TA that you do, is I say, hey, the CPI numbers come out and they're better than they're supposed to be. Now, we all know, or at least believe, that that's probably just someone rubbing your shoulders trying to tell you everything's okay while they're lighting your toes on fire. But that's the only correlation besides with ETH, with the merge, that I can kind of draw. Can you talk me through what some of the charts are actually showing you when we dive into and look at those?
Okay. So markets love to climb the wall of worry. Right?
The wall of worry. Okay,
the wall of worry. So, every day there's a new piece of news like, oh my God, there's inflation. Oh my God, Mark Cuban's getting sued.
Yeah.
The news flow, even though the price action is bullish, the news flow is still negative. The media is still hooked on disaster. Okay. Now, if you go to the chart, let's just take a look at Bitcoin for just one second. I know it's not doing much, but that's actually become something worthy of looking at. So this is Bollinger Band width, this green line down here. Now, a Bollinger Band, I don't know. It uses statistics, right? When the market is very volatile, it gets very wide, okay? And when the market's not volatile, it gets narrow.
Okay.
So, we can look at Bollinger Band width and Bitcoin. And obviously, as you're painfully aware, Bitcoin has done absolutely nothing, right, recently. It has done nothing. Sorry about the background.
That's all right. That's all right. Hey, I've got dogs. I totally get it. It happens.
So the dog knows about the Bollinger Band width, right? And here's the deal. When Bollinger Band width gets tight, right? When it gets really tight, that's like winding up the spring for Bitcoin.
Okay.
So Bollinger Band width, October 2020, right? That was like, right after DeFi summer, right? Everyone's like, oh, Bitcoin's terrible. Seriously. Our boss, Ian Bellina, the altcoin guy, was getting calls from Bitcoin maxis going, hey, man, can you recommend a token? Bitcoin's not doing anything. And then, of course, Sailor came in at 10K and it moved.
Boom.
July 2021. Crashes. It's over. It's going to zero. Market does nothing. Lulls everyone to sleep. Boom. Okay. In technical analysis, things happen in threes. This is definitely like psychologically and numerically, this is the third dead zone. Where that Bollinger Band width crashes, okay? And this will probably lead to either 34 or 40, I think.
Ooh, 34 or 40. Okay, so hold on a second. Let me pull this back up. Let me just speak this right now. We are currently at 23.9. Okay, so that is a massive move. So let's just call it 34. That's 10. That's almost a 50%. That's probably about a 42% rise from where we're at right now, from the 23.9 number. When that move happens, my concern is that I believe later on down the road, I personally think that we're going to be headed back down to the downside. So when you make a move like that, let's assume the move happens. How many people are going to lose the shirt off their back because the talk is going to be the bull runs back on, baby. We're past 30. We're past 32. We're at 34. We're climbing. And retail traders will do as they always do, FOMO. They're going to FOMO in. That's just how this works. Do you believe that there's something that they can do, we as the retail traders that are watching, to kind of mitigate, to stop yourself from doing that? Is there something that you believe that people could do right now to set themselves up for success, understanding that you believe that there's a move that's going to be happening, that's going to be a large move?
Yes, you can become comfortable with being uncomfortable.
Okay, explain.
Here's the plan. So let's say you get Bitcoin, I don't know, 24, 23.
Okay.
Then maybe there's a move to 28 over the next 5 days. And then the range traders, it'll come back down.
Okay.
Right. Okay. When it comes back down, okay, retail traders will not be comfortable buying the dip. And they're probably not comfortable buying it now, right, because they feel like they're buying it at the top of a rally. Okay. Yeah. So retail traders are like, "Ooh, I'm scared." And you need to act when you're scared. You need to put your Danger Close Alpha gas mask on.
Let's go.
T-shirt, right? Get that sticker on your computer and go now. Not investment advice. This way, when it goes to 40, because you know who's going to FOMO at 40? Not retail traders, but institutions. Institutions are going to FOMO in at 40. And that's when retail traders want to go like this and sell. Okay? So what you also don't want to do is retail traders may watch it go to 40 and they go, I won't buy, and they'll buy the next dip. Right. And then it'll just keep dipping.
Keep dipping.
Right. Just keep dipping. So I will be right back.
You're good. So Crypto Fam, Bill's going to step away for just a second. Looks like he's got somebody at the door. I just want to kind of throw out there, okay? When I look at these markets right now, this is a prime example of why, a lot of people try to not pin me, but try to ask me to give a solid price prediction. Like, give me a price prediction, Keeper. You used to kind of give some predictions and this, that, and the third. Are you scared to give them now? No, I'm not scared to give them now. But for me, the reason that I don't like doing the price predictions anymore is because the reality is I don't know. I don't know. But what I do know is this. I know that long term, we're going to see 100K Bitcoin. We're going to see 100K plus Bitcoin. We're going to see some crazy numbers from Bitcoin. So for me, when I talk to you about this boring dollar cost average DCA strategy that lulls you to sleep, I can tell you, I'm going to sleep just sound on my pillows stacked full of Satoshis, okay? Because in the long run, what's going to happen? We are going to continue to go up and to the right. And what Bill was saying was be comfortable being uncomfortable. I'm going to tell you, give you a great example. I bought the COVID dip. I've talked to you guys about this before. One of the best things I ever did was really buckled down and bought the COVID dip, right? And it was against, I mean, it's a hard thing to do, like Bill's saying, be comfortable being uncomfortable. I was uncomfortable as heck. People were talking about the world was going, you know, Christ was coming back, right? Like it's over, right? And people were scared. And so I bought that dip. And so looking forward, right, I am able to look at the numbers right now that are down 50, 60, 70%, whatever the number is from that 69K right now. And I'm still up 6, 7, 800%. And so what I want to encourage everyone here is that you can be in the exact same position. The market can be in the pits and you still be incredibly comfortable if you're comfortable now saying, hey, look, this is a long-term game. And I think that's where people they miss too often. They either try to do all trading or they sit on the sidelines until the perfect time, and there's just not really one. And I think that that's where people miss. I know, Bill, do you do a good mix of trading and long-term? Are you using your trading profits to long-term hodl, or like what does that look like for you?
Okay, I use a legacy term. Okay. It's called active portfolio management. So for example, say some guy's managing a portfolio of stocks and bonds, right? Okay. If stocks go way down, you know, he might sell some of his bonds and pick up some stocks. Or if stocks go way up, he might do the opposite. Mm-hmm. Right? In crypto, if you have a portfolio, right? First of all, you don't have to be all in or all out. To remember that. So if the market goes way up, you know, you can sell 1/3. Or if there's a markdown like there has been recently, or Bitcoin's trying to put you to sleep, you know, this is when you can accumulate, right? So I know it sounds simple, right? Traders, other guys you have on the show, I mean, these guys are ridiculously smart in terms of their ability to swing trade the market. Mm-hmm. I like to say when you're an active portfolio manager, you're going to make about 5 to 6 moves a year. You're going to hodl, but you're just not going to hodl 100% of what you're working with. Yeah. Right. You may be 30% in the market. You may be 100% in the market.
Right. I think that's important too. It feels like, and this was kind of a life lesson that I learned in the crypto space. I learned it actually in the stock market first, but it feels as if I don't do this anymore, but exactly to your point, it felt as if I don't have everything in there and the market goes up, I'm losing opportunity. It's not, I could have made so much more if I would have had everything there. But what you need to remember is it's not always going to your favor, to your advantage, right? And there are going to be opportunities that are going to arise out of nowhere. And so when we talk about game planning, I think it's a really important thing to be able to look at what are you doing? What works for you? What does your lifestyle look like? Are you actively trading? Are you hodling? Are you doing a combination of both? Are you able to actively manage your portfolio? Or should you just be doing more like what I'm doing and looking for opportunities, continuing to DCA and just long-term stack because this is my retirement opportunities, right? And then flipping NFTs and doing some other stuff. You need to have a game plan for yourself. If you don't have a plan for yourself, fail to plan to fail. Right. And we talk about that as it relates to Danger Close Alpha as well. For those of you that don't know, we've got an NFT project that we're working hard on. We've got a drop coming that is all about taking the prepper community and the crypto and NFT community and putting them together. The crypto community is preparing. They're preparing for the fall of the dollar. The prepper community is preparing for the fall of like whatever's going on in this world real quick. And, you know, we just encourage you. Be your own bank. We've got our sponsor here. Well, something like that. Come here, baby. Come here. Ah. Can you say hi to everybody? Can you say hi? Yeah. This is Lil Addison. Addison wants to remind you, get a ledger, be your own bank. Don't let these institutions push you around. They will take advantage of you. You are setting yourself up for failure. We've already seen it happening. Voyager, among many others, where all of a sudden your funds are frozen. Well, guess whose funds aren't frozen? Little Addison's funds aren't frozen. They're sitting on a ledger right now. So you should be doing the same if you guys are looking for a link below the video. I love you. Good night. All right. So, all right, let's talk about let's do a short, midterm, long-term analysis of what you're seeing in the markets. Let's start off with short. So what would you consider to be a short-term analysis, Bill? The next couple weeks or shorter, a little bit longer? What's kind of a short-term analysis for you?
Okay. A short-term analysis would be, say, like an 8-hour chart or a 4-hour chart.
Okay.
All right. Now, I also do, we talked about the hand-kept work that I do on my Twitter, right? The William Gann work.
The Gann chart.
Right. So there's seasonal work that I do. All right. And the seasonal work shows that it's bullish to like the middle of October. I'm sorry, the middle of August.
Okay.
And then what you want to be ready
middle
for.
August, we're almost there.
Right. So there's probably going to be one more thrust up in big coins.
Okay.
So let me bring this chart up.
Yeah.
So this is how I would call, this is my tactical look.
Okay.
So this is, I'm basically a Zcash maximalist. People thought I was nuts. And then this tornado cash thing came out and then they kicked down Trump's door. We talked about that. It's the perfect channel to hear about all that stuff, by the way.
Yeah.
So here is Zcash, right? And here is the big rally. And in the short term, I'm like, okay, well, maybe if the top comes in the next couple days around resistance at 82, you might get a dip back to either the 23% retracement or the 38%. Now, why those numbers? Well, because when you have a 23% or a 38% retracement, if the thing goes up and holds those levels, that's how you know you might be in some kind of mega trend.
Okay.
Okay. So at a tactical level,
that's just statistically, that's just in the past that is shown to be the case.
Well, not exactly statistically. It's more like it's what I've experienced from doing this since 1991.
Gotcha. Okay.
So, if something is holding, even if it goes up more from here and you have to redraw it, right? If something dips and holds to 23% or the 38% retracement, like look here, right? They had this rally and it came back down. It comes to the 23% retracement in Zcash and holds.
Okay.
So tactically, I like 89-minute charts. Okay. That's also a Gann and fib number.
Right.
So that's how I would do the tactical analysis in like a trend. Okay. Right. Range trading is a different story. We have those experts on here. I'm really more of a trend guy. All right. Now, long-term analysis is that cool, or do you want me to?
Yeah. No, I kind of wanted to know a short-term, mid-term, and long-term analysis of kind of where you're seeing things right now.
Okay. So here's what I would call the midterm. Okay. Legacy guys call this the intermediate term. Let's talk about the dollar. We were on the show last night talking about this.
Yeah.
So when we talk about the intermediate term, we want to talk about what's going to happen in crypto, say over the next 60 days.
Okay.
So you're doing an 89-minute chart. You're trying to figure out the next 2 to 3 days. You're looking at a daily chart, or you're trying to do cross-market analysis. Like, let's look at the dollar and crypto. That's the 60-day look or the 45-day look. Okay. So here's the dollar, right? The dollar goes up, 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 and makes higher highs.
Yep.
The 13-day RSI makes lower highs. These type of divergences, when they happen, they can lead to not only tops, but they can lead to brutal flushes. Okay. And normally the second leg of the flush is the big one. So you got the dollar topping here, and let's see, the dollar index is at 105. Let me ask you something. What do you think the news media and crypto Twitter will say if the dollar index actually goes below 100?
What do I think the media is going to actually say?
Right. Well, what do you think? In other words, dollar down, crypto up.
Oh, yeah.
Right.
Absolutely.
Right.
Yep.
Dollar down, crypto up. And if the dollar index falls below 100, that's where you'll have like a FOMO climax.
Yeah. They'll tell you we're going to 100K tomorrow. It's happening.
Right. And I think this is going to be the driver in September. Now, if somebody's going to ask, well, why would the dollar go down? Well, the Fed's going to raise rates massively in September and be done before the election. And as we've discussed, just keep it brief, you know, the United States government, the behavior is unbelievable. It's unbelievably bad. We're not acting like the United States at all, right? We're making the preppers look really smart.
Yeah.
That and stagflation. Somebody say, what's stagflation? Well, unfortunately, it's when someone loses their job and their unemployment check doesn't allow them to pay for groceries.
Yeah, pretty much.
Sad, right? But when you have a government behaving like, I don't know, like some government in the third world, and then you have stagflation in legacy, that tanks the currency. Now, we're used to it being in Venezuela, Argentina, Zimbabwe. Well, guess what, everybody? It's happening now. Right.
It's scary. It's scary, Bill. So what basically is happening, what Bill's referring to is basically that we live in a society based on debt and money movement. Like a lot of people will look at velocity of money. How is money moving? How fast is it moving? Where's it moving? You know, that's velocity of money. Okay. What happens with stagflation is all of a sudden things are kind of basically grinding to a halt. People are realizing, so as they continue to raise rates, they're trying to basically bring the value of the dollar. They're trying to move us towards deflation, right? But what people will recognize if things get deflationary is that, wait a minute, if I wait 6 months, this is going to, I can buy this. I'm going to be saving money. I'm going to be spending less money 6 months from now. So what do? They stop spending, right? They say, well, I'll buy that 6 months from now. Well, what does that do? That encourages everybody all of a sudden to start saving. What does the government want us to do? What does our world work on? Velocity of money, keep the money moving. So the moment that we stop spending money because it's going to be worth more later, and that gets recognized, it's trouble. Because guess what? Now businesses are not getting the sales out that they normally have. So then what happens? Well, then they got to make up for that somewhere. Well, they're going to start firing people. Now people can't get, or they come to you and say, hey, listen, we know we were paying you X amount, but really, if you're going to stay on here, we can only afford to pay you this amount. Nobody wants to do anything but a freaking raise. And in a deflationary state where we're at, like where we hit stagflation in between, nothing's moving except for maybe you. And it's just all bad for the economy. It is bad, bad, bad. The thing that frustrates me, Bill, is that these economists, I've said this for a long time.
Oh yeah.
They're not stupid. Okay. So like we can have the conversation. Oh, these idiots. What are they doing? Listen, they knew what they were doing. They know what they're doing. This is simple economics. You don't even have to be an economist to know this. You could do a little bit of studying on macroeconomics and microeconomics and kind of understand how this looks. And you would understand, oh, we got a problem. You can't print trillions of dollars and expect this not to happen, and they knew it. And so what's frustrating to me is just the brutal dishonesty is saying, well, we've got it under control. B, inflation is not nearly what you're saying it is. And C, we've got a way to curb this. And I just don't know that I think that they do. Do you think that they actually are going to be able to do something without absolutely crushing our economy? I think the only way, I actually had a TikTok that got taken down. It had a couple million views, and all I talked about in it was the only way to save the dollar is to crush it. And I was basically saying we have to put ourselves into the crapper here to be able to pull the dollar out of what we've created. And I don't know why it got taken down, whatever, it's just the world we live in anymore, apparently. But do you see a way that we pull out of this, Bill? And if so, or if not, what's crypto look like in that scenario? So give me a couple scenarios of it works, it doesn't work, and how's crypto react?
Okay. So how does the Fed fix the printing money, the inflation that comes from printing money? So to your point, I majored in economics. QE and printing money wasn't in any of my books because it was obvious, it was laughable. No point in writing about the fact that if you print money, you print enough money, you get hyperinflation. So here we are. Okay. These guys violated everything that they ever learned. Now, what's the solution? Well, it's the solution that the prepper guys are preparing for. The good thing about Western democracies and free markets is that free markets can adjust, right? It's like, oh, you guys are behaving badly. Oh, the stocks are overvalued. Oh, you guys are sending IRS agents after the rich. Okay, well, let's take these capital markets. That would be stocks, corporate bonds, the dollar, right? Yours. Right?
See ya.
Yours. See ya. Ray Dalio from Bridgewater. Definitely want to Google him, right? He's talking about stagflation, and he's making a big bet on corporate bankruptcies. So how do you get out of it? Well, sadly, you just have to roll back at Walmart or a markdown at the department store. It's 50 off. And we're used to that in crypto, but they ain't used to that in legacy.
No.
So, the way out of it is to just mark everything down, right? Everyone who thinks they're safe in stocks and real estate, well, the prepper community and the crypto community would like to wish you the best of luck. Now, dialing back the smartass one notch, obviously, if there's going to be a massive markdown in stocks, which could be in the fall of next year or in the fall of this year, because there's going to be chaos at the election, right? Like internal disorder, international disorder. We need 3 shows to go through it.
Yep.
Okay, but that's going to happen in November, and when crypto gets caught in that, unfortunately, all right, that's going to probably lead to an unwind of the rally that happens in September.
Yeah.
So you were asking for the long-term chart view. Here's the long-term chart view, right? I actually do this on XBT, right? Because, that's I kind of grew up with XBT and crypto. So this is Bitcoin Weekly, right? I can kill this Bollinger Band study here. So obviously, maybe it's a head and shoulders top. It's a small shoulder, but it still looks like a head and shoulders top. Normally with a head and shoulders top, you travel the distance between the head and the neckline here from the point of the breakdown. That gives you something like 15K. Okay. So if stocks crack, or if they're, you could have a multitude of things. Inflation could get out of control. Putin could drop a tactical nuke. They can't count votes at elections. There could, what I'm saying? It's like there could be right versus left fighting at polling places, I think. And of course, don't forget monkeypox. Like I had a horse in the background. The horse got monkeypox. That's why the horse is gone. Right. That stuff's out there. Right. And if it all happens at once, okay. But here's the thing that you want to remember. So Keep is telling, the following on the show, DCA hodl. Okay. What you want to remember is this, and it's happening now to a small extent and a much bigger extent in November. The moment that people hate it is the moment where the use case comes through. The moment when everyone goes, oh my God, I can't touch that. That's the moment where you need it on a thumb drive for your kid.
Yeah.
Okay. You have a trading moment now into September, and you may have a longer term opportunity at the end of the year. You may be buying yourself some Bitcoin for Christmas at a very low price. Okay.
Yeah.
So much higher before much lower, and look at it as an opportunity, right? Let the institutions buy the top. You sell it to the institutions, not the other way around.
Yeah, and that's too often what happens. It ends up being the other way around, because a lot of the institutions, just so everybody is aware, a lot of these articles that you read, okay, and this is just a fact. I'm going to give you guys a little backstage pass here real quick, okay? A lot of the articles that you read are paid for. How do I know that? Because we get approached as a social media, and listen, guys, we've got, less than 8,000 subs on this channel, but we have been approached and basically said, hey, we can get an article written on you in this, and this publication. You can say what you want, blah, 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 for X amount of dollars. Okay.
Right.
So what do you think when you see these interesting articles that are some random altcoin, right, that just out of nowhere, and if you read it, it's like, holy mackerel, that's got to be the most bullish thing ever. Well, there's a very good chance that the people that either own or have created or something to do with that alt have paid to promote that. Well, What can you do with that? Well, you can do a lot with that, because these massive institutions that have a ton of money can goad you into believing we got a lot more to go. You guys remember, I don't know if you remember this, but when we were headed towards 64, okay, there was not a freaking chance that we weren't headed to 100 this last year. Not a chance, right? Like it was just absolutely, and everything said that that's where we're headed in terms of the news. Well, guess what? They sold to you. They sold you the top. You bought the top, right? And when I say you, I'm just saying the retail traders bought the top. And so what Bill and I are talking about here is we believe that macroeconomically, we're going to have something wild happen. We do have midterms coming up. That's always a crapshoot, let alone the world of divisiveness that we live in right now. So there's just, who knows what's going to happen there, right? That you've got that going on. We've got turmoil throughout the world as it relates to wars and unrest, right? We can't decide. We can't agree on what the weather is in any certain city, right? Right now, because nobody wants to hurt someone else's feelings and tell them it's a little gloomy outside, right? And so I think what we need to be prepared for is there's a very good chance that there's going to be something wild that happens, right? And what's going to happen from that? Well, the markets are going to respond. They're going to react. And I've been talking about this for a while. We're not here to give you financial advice, but what I can tell you for entertainment purposes are that it was very entertaining to me when I bought that COVID crash. And I think it can be very entertaining to you when it happens, albeit very scary. It could be the best opportunity that you ever run into, because we're moving into a world where I think crypto is slowly but surely moving truly into the mainstream, and you only have so much time before it becomes the stock market. And I believe that. Bill, are you kind of on that thought process? Like we might be in the last, I don't know, 4 or 5 years worth of like truly massive opportunity to make these ridiculous gains in crypto. Do you think we have that long? Do you think we have longer in terms of if somebody was just getting in now?
Sure. I think if somebody's just getting in now, I'm telling people that the future is now, because I'm doing Zcash and privacy, right? I mean, nobody is going to do a transaction anywhere where somebody can look in your wallet, right? You're just going to need to protect yourself and be a sovereign individual.
Yeah,
right?
that's true.
You're not a pirate. You're just going to need to be sovereign so your wealth does not get held against you. Now, you can say to yourself, wow, I could have bought Bitcoin at 70. Okay. Now, Bitcoin was at 70 and then it went to 14. And that's the same thing with Zcash. Zcash is at 70 and it could go to 14. And I don't care. Right. So if you think about the future, in research, you get paid for imagination, right? If you think about the future being now, if you think about, gee, what are people going to want later, right? I mean, it's sitting right in front of you. So if you just walked into crypto today and go, wow, I missed everything. No, you missed a huge pump that was driven by the Fed printing money. The next rally is going to be the actual use case.
The actual real deal adoption, actually what we're using it for.
Right. So Snowden at Consensus, when he talked about Zcash, he said, stop trying to invest in crypto and start thinking about using it. Now, what he was saying is, dial down the degen, particularly in a rising rate environment. And think about what is the future of money, or even stuff like Cardano, right? Cardano at 50 cents, even though it's a top market cap coin, right? These layer ones, like Zcash may have a layer one. So there's stuff that is going to be the future that's out there right now. So if you can take advantage of the volatility and not have the volatility take advantage of you, right? That's one way to look at it. And your COVID trade reminds me of Paul Tudor Jones, another legacy hedge fund guy, who said the best trades are the toughest trades, right? It's the ones that, like you're like, oh, your spouse looks at you and like, you did what?
Yeah. And, Warren Buffett, as an example, said that he made more money during 2 times, 2008 and during the COVID crash, than he ever had in his entire life. Why do we think that is? Because what Bill was just talking about, volatility, that word volatility in investing, it should say volatility equals friend. And you're probably thinking, wait a minute, what? Volatility is scary. Yes, it is. But if you know what you're holding and you know what you're holding for the long term, that volatility then shows you an opportunity. It opens the door. It says, hey, here you go. It's going to be scary. It's going to be a wild ride, but put your hands up and strap in, because here we go. And I think that too many times we get caught with our pants down, so to speak, because what do? It feels better to FOMO in. And why does it feel better? Because everyone around you is rubbing shoulders, scratching each other's back, talking about how crypto is the greatest thing ever, right? Now what's happening? I get the snide comments at like a family event or something, like, hey, how's your crypto portfolio? And I'm like, if you really knew, I mean, you wouldn't be asking me like a smart ass, okay? But that's what happens, right? And so if you can just get the attitude that, hey, I'm in this for the long term. This is supposed to be life-changing. I don't need to put my rent or my mortgage money in. I don't need to put my food money for the week in. I need to put something that I'm comfortable not having, because then it takes that stress off of you from, oh my gosh, I need it to pay X, Y, and Z. No, you don't. Then you're probably doing too much, right? And so I want to encourage everybody, no matter what strategy you have, get a strategy, right? Bill is over at Token Metrics. They've got the AI learning. That's the machine learning. Guys, I got to tell you, as much as I hate freaking machines sometimes, and I'd rather just talk to a human being, some of these machines are pretty freaking smart, okay? And they're going to be able to not put emotion into a trade and say, hey, this statistically has worked in the past, and this is going to work now, blah, 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 and statistically it can work out. But whatever your game plan is, just put the game plan into action. That's what it's about. So I just want to encourage everybody, make that plan, stick with the plan, embrace volatility, and press forward, because it's going to be a bumpy ride, but you, just like a lot of other people already have, can still take advantage of what the crypto market's got to offer. So Bill, I appreciate you for coming on. As always, brother, we look forward to continuing our relationship moving forward, dude. You have been nothing but a pleasure. You always do a great job. So thank you for coming on, brother. And
thanks for having me.
Yeah, dude, we look forward to having you on again. We'll see you next week. And crypto fam, just remember, question everything, trust nothing. And until next time, hodl like it's hot. We will see you soon.